Welcome to Space Insiders. My name's Tony Sewell, and as usual, here with Rob Riak. How you going, Rob?
Great, Tony. How's down under?
It's good. Busy. We got uh, spent the week with the team in Sydney last week, and this week my wife flew in, and we're trying to find somewhere to live. So no pressure to get that done this week because we're moving down here in about 5 weeks' time. So it's really snuck up on us quickly.
It's exciting, man. You guys should see the pictures that Tony sent to me. I mean, he's going to be having a beautiful view. It's going to be great. Really happy for you.
Yeah, thanks, mate. So really fun interview today. And something a little bit different. We met with Patrick Johnson, who is managing director at Silicon Valley Bank, focused on their startup business. And I know he's a good mate of yours, Rob. Would you like to tell us a little bit about it?
Yeah, I met Patrick back in 2010 working at Booz Allen and was really impressed with him from the get-go. Just super smart, really good with relationships, highly networked, quick on his feet, and that it's been interesting to see his progression, his career, move from a consulting role into having some global expertise and experience, but then working all the way into Silicon Valley Bank, which at the time I was really surprised that he did that. I wasn't really sure what he was doing, but it made all the sense to me once I reconnected with him and he told me more about what he did. Working in Silicon Valley and not just being a quote unquote banker like one would think, but serving as I would just say he's like an Uber dot connector. That's really what it
Mm.
was or what it is. Being able to help companies in kind of all different facets of what they need, not just financing, but introduction to customers, to partners, to legal teams, anything that kind of fell within the web of a Silicon Valley Bank network, in that of a huge bank like them, that he could help other companies to be successful from day one, the best that they could, and he's really good at it. And it led him to some new opportunities that we'll hear a little bit more about during the interview. So,
Yeah, I think that
so
was the most interesting thing for me, and sort of what Patrick was, I guess, emphasizing that the relationship with the bank is not necessarily just about the money. It's certainly the way that SVB works, and how they help sort of create the foundations and the connections that founders need, and the advice. So I think there's a lot of really good practical nuggets that our listeners are going to enjoy in this. Before we get to the interview, there were a couple of pretty interesting stories in the news this week. The first one I wanted to mention, which I think is kind of interesting because we've met with a few people in the space situational awareness and operations game, was the news of the Chinese team, the Shenzhou 20 return was delayed because of debris impacting their mission and their space station, which I think is, I guess, it highlights the the risk that we see a lot of people in the industry talking about regarding, um, I guess, the level of control and regulation and understanding of what's going on in our near Earth orbits, and the real danger of debris and, I guess, uncontrolled behavior.
yeah, it's kind of scary, right? I mean, it's one thing if it's other satellites that are in danger. It's another thing when you actually have humans in orbit,
People, yeah,
and they're at risk. I mean, we saw that. What was it, a year ago? Maybe a little bit longer. With the ISS and a similar thing where
yeah.
the astronauts had to remain inside the ISS for a period of time because of the same risk. So it's a real thing. I mean, it
Yeah,
really it definitely is. It's not theoretical.
right. All these
And
great things that we're going to be
yeah,
able to do in orbit, but that's an absolute table stakes. So,
yep,
um,
yep.
the other
I
big
agree.
news was, and I know you've got a lot of friends at Blue Origin, Rob, but like this massive step they took with New Glenn last week, It never ceases to amaze me seeing companies like land these these rockets
Yeah.
on these ships. Like,
I mean, it is honestly, if you have not seen that video, you have to see it. I mean, it oddly is emotional, like, when you watch it land
it
because
is, yeah.
you
You
just
feel the chills.
you just think about all these people, and there are so many smart people, and, like, there's, like, thousands of people now. I think they have, like, 10,000 employees at Blue Origin. They're
Mm,
not all working on New Glenn, but when you see these videos of the employees cheering, and you think about how in the world can you actually have an organization of people that all come together, do something like so Marvel. I mean, it really is one of the most incredible things
yeah,
that a human
100%.
has done is being able to do something like that. And the other thing too is, they're coming off, they've learned a lot obviously from SpaceX, but these guys landed that the first time they tried. I
Yeah,
mean, it's unbelievable, right?
it is.
It's just
Yeah.
unbelievable. So, and it's such a great thing for the market because and for this industry, because now there's competition. Like, now there's legitimate competition. I think we're gonna be able to see a lot more opportunity for companies to do big things because it's only gonna drive the cost down more, for launch. And I think just the ability to launch new and different spacecraft, I mean, it's got a huge fairing size. I mean, there's so much you're gonna be able to do with that vehicle. It's so cool, and it really is. It was so great to watch that, and definitely go watch the video if you haven't seen it yet.
Yeah, 100%. And fingers crossed, we might have an interview with someone from Blue Origin in the next few weeks as well. So
Yep,
stay tuned. All right. Well, look, I think it's time to get to the interview with Patrick. Rob, what do you reckon?
I can't wait. Let's do it.
All right. See you in a minute. All right. Welcome back. And today we are joined by a managing director from Silicon Valley Bank, Patrick Johnson. Patrick, great to meet you. Thanks for joining the show.
Thanks so much for having me here today.
Good to see you, Patrick. Thanks for doing this with us again, man. This is just exciting for me to have you. So thanks.
And yeah, Rob's been telling us a lot about you. And I'd really just like to start just to hear a little bit about what you do. Tell me what a managing director responsible for startups at Silicon Valley Bank does.
Yeah, for sure. So I've been a part of SVB for a little over 8 years. However, that tenure is now running to an end. And as Rob knows, I actually tendered my resignation last week, and so
Oh,
I'll be
wow.
departing at the end of the month to join, an early stage venture backed startup. I'll have more to share about that, but I'll still be, very tightly, involved with the broader innovation economy, the startup ecosystem. Um, and yeah, what I've done over the last couple of years, I've been responsible for Silicon Valley Bank's early stage group, covering our East Coast markets. And so we tend to segment the startup ecosystem both based on sector, stage, and geography. And so my team has been spread out between Boston, New York, DC, Atlanta, Miami, Austin, and Chicago. Those are the principal markets that we're focused on, and predominantly supporting pre-Series A founders. So we typically, get involved with these companies really early on. There's no such thing as too early. Sometimes it's just a couple people in a business plan sketched out on, the proverbial napkin or whatever. And then we obviously bring them into the bank, give them, the full suite of commercial banking solutions that you would expect. But where we've really differentiated is in delivering what, I kind of frame as value beyond banking. I think that a lot of banking is pretty commoditized, and so to stand out in a crowded marketplace, you need to be doing more to help founders be successful. Um, and so, we do a lot of we kind of take a very broad definition of what it means to increase the probability of success for the companies we work with. So our team becomes an extension of their team. We help them with business development opportunities. We do joint sales events to connect dots across, the thousands of companies that partner with us, to identify, interesting channel partner opportunities, sales opportunities, things along those lines. We help with recruiting as well. I mean, we have a network of over 700 CFOs, in a program called SVB Advantage. And that was top of mind because just yesterday, one of the companies we work with said, "Hey, we're trying to hire a CFO. Can you help us kind of attract some candidates for it?" And so we're able to share the job rec. And I saw just before we started recording that, 3 people have already applied for that CFO role. But, also if you're trying to hire a head of customer success, a VP of sales, people on engineering or product, we tend to have pretty deep networks in doing that. And yeah, so, in a nutshell, that's what we do. A lot of our work is pretty event driven. We do a lot, obviously, also in helping companies raise capital through our investor network. And so we're doing demo days, pitch sessions, investor readiness, and fundraising workshops. I just hosted one of those pretty recently with a partner over at Slow Ventures in New York. And yeah, it's all in the service of founders.
This is awesome. This kind of area is pretty new to me. I'm more from the sort of the tech and product side.
Yep.
I am really interested though, before we kind of dive further into that world. We talk a lot to the people we interview about their background and such varied backgrounds,
Mhm.
and sort of journeys for the folks we've interviewed, and you've had a really interesting background. You worked for the OECD. You've worked in consulting and now banking. Just tell us how did your sort of career evolve, and now you're about to go off into an exciting new startup journey as well. Like what's that journey
Yeah.
been like?
It's one of these things where it's like, the dots connect in hindsight.
Yeah,
And not obvious when I was starting out that I would end up where I am now and do what I'm doing. But feel very fortunate for kind of the way the journey's unfolded. So I initially met Rob when we were working at Booz Allen together back in the day. So I joined Booz Allen, on the commercial strategy side back in 2008, and really loved it. And I kind of stumbled into consulting. Growing up, I'd never heard about it, but then I was doing a summer program at Georgetown, and it seemed everybody there wanted to go into investment banking or consulting. And so I was doing my research, and I'm like, okay, this seems interesting. And so basically, just tried to follow some of the advice of people that I considered really smart and connected. Got my foot in the door at Booz, and in hindsight, that was an amazing place to start a career. Just because in consulting, you get exposed to so many different industries and projects and engagements you get to work on. You're able to build a really transferable skill set. And I loved it. I loved the firm culture. I was there during a pretty unique time where the Carlyle Group had purchased Booz Allen. They spun off the commercial side, and then they were kind of really focused on building out the government and defense business. Learned a lot, worked with some incredible people. And then after about 3 or 4 years of doing that, I actually met my wife as well at Booz Allen. So thankful for that, 17 and a half years ago. Um, and yeah, after, 3.5 or 4 years, I was expecting that I was going to do the traditional, MBA route and then, take a break, do my MBA and then come back and rejoin the firm. But I had done some projects for the OECD over in Paris, France. And one day, the client that I supported over at the OECD gave me a ring, and he asked if I was interested in coming over and kind of joining his team full time. And it was pretty hard to say no to the opportunity to
yeah,
relocate to Paris and to work with the OECD, which really interesting non-governmental organization, comprised of, at the time it was around like 30 member countries, and putting together a lot of, research on public policy, economics, things that I was just kind of acutely interested in to try to increase economic development and opportunities in those countries, to share, what was working on a policy side among member countries to just ideally make things work a little bit more smoothly. And so went over to Paris, did that. Loved it. Really had no intention to leave, but then had the opportunity to rejoin Booz Allen and to help them launch a new business in Singapore. And at the time, my wife and I still had a little bit of wanderlust, and it seemed like a cool opportunity to then spend time in Asia, which was obviously in the middle of a boom. Still is in the middle of a boom in a lot of ways. And so we moved to Singapore. We were there for a couple of years. I was building out kind of the Booz Allen office there. Also supported some projects down in Australia, which I know is where you're based now, Tony. So I had some fond memories of that. And then ultimately was given the opportunity to reload with Booz to San Francisco. Um, and I was working on a group called Solution Studio where, the whole consulting business was really changing. And clients were less inclined to pay a bunch of money just for a PowerPoint deck outlining a strategy or what we thought they should do. They wanted us to actually go in and build product, build solution, just get a lot more involved. And so the initiative I was working on in San Francisco was around helping to productize a lot of IP that Booz Allen was developing, and to try to facilitate this transition into becoming a little bit more of a product company. Now, the issue is when you get to San Francisco, it's really, really hard not to get the startup itch. And while I loved what I was doing
Mm.
at Booz, they're a big, Fortune 500 corporate. They operate on a very different time scale than startup world. And I just really felt compelled to join an earlier stage startup. At that time, I never heard of Silicon Valley Bank. But what I quickly realized is that almost all roads in the startup ecosystem seem to flow through SVB. They were working with the vast majority of venture capital funds, working with the general partners at those funds and firms, banking all of the, kind of really exciting, high potential earlier stage startups. And I had a friend of mine from Paris who had moved over to join SVB, and he kind of convinced me to join him. And I thought I'd be at SVB for a year. I thought it was an opportunistic way for me to accelerate building out my network in the startup world. Um, and I joined again thinking I'd be there for a year. And then pretty much from day one, I recognized it was a really special place. One of the things I'd say is that it's obviously a bank for entrepreneurs, but in many ways, SVB was also a bank of entrepreneurs.
Mhm.
And so felt that, I was joining a place where we had the opportunity to kind of create the future of our industry and sector. Um, and initially was part of an enterprise software lending team in San Francisco, which when you look at the startup ecosystem, roughly 60% of it is in NorCal. And so it was a really good market to support because, just the velocity and the size of the deals, that's where the best founders in the world are based, and had a great time doing that. And then ultimately had the opportunity to then transition into a couple internal management roles where I was supporting the former president of SVB, first as his chief of staff, and then as the head of strategy for the bank. And then after the, kind of the regional banking crisis in 2023, worked on the rebuilding efforts, and we can get into some of the stories around that if you're interested.
Yeah.
And yeah, basically then had the opportunity to move into my current role, running, this early stage group on the East Coast. Also, kind of coincided with, my wife and I started having kids, grew our family. So we have 3 boys, 5, 3, and 1. Her family's in the area. And so, we wanted to move back to the East Coast just to have proximity to grandparents and all of that, which has been great.
So I remember, and this was 2010 when I went from Booz and Company to Booz Allen, and I met Patrick for the first time. I remember Patrick talking to Michael Farber, who I talked about in one of our previous episodes. We were talking about leadership. He's such an amazing guy. I remember turning to him and being like, who is this guy? Who is this guy, Patrick? He's so young, he's so mature, he's so smart. And the one thing that always stood out about you with me, Patrick, is like just how good you are with relationships. So I remember when we were pulling together the Booz Allen Venture Capital Group,
Yep.
Corporate Venture Capital Group, and we were thinking through Solution Studio. I was so excited that you came back to do that because
Mhm.
that whole concept was exactly what you were then doing in Silicon Valley Bank, which I think is such a core asset that you have and skill that you have, which is to meet people. You're not afraid to meet people. You're really good at nurturing those relationships and then bringing them to bear to help others. And I think that's one thing I want to talk to you a lot about today is, you know, how do you do that now? Well, I know you're moving on, but at Silicon
Yeah.
Valley Bank, as you were doing it, like what was core to that
Mhm.
was bringing people together constantly and trying to educate them, and not only how to raise money. Because I think in the startup world, if you're not that familiar with it, everyone talks about venture capital all the time,
Mhm.
and I think a lot of the time it's money to help you grow your business, start your business,
Yep.
whatever it is. But there's so many other core things that a company needs that you just kind of listed, which I always thought was kind of unique to Silicon Valley Bank,
Mm.
right? It's not just another bank. So what is it that you would recommend to startup companies raising money now or looking to start their own company? Are there other things that they need to ask for when they talk to a bank? Is it really just about getting funding,
Mhm.
or are there other things that you would recommend that they ask for as they get started? Because there's a lot of things, there's a lot of risk out there, and there's things that not until you ask do you really know. So, what would you recommend?
Well, I think you just nailed it right there. It starts by asking. You know, there's no harm in you know, kind of asking for anything, right? Some of the most interesting people I've met have just come from straight up cold outreach. You know, I hear somebody's working on a
Hmm.
cool thing, find them on LinkedIn, reach out to them. You know, it's coming from an authentic place as well, where I'm like, you know, genuinely curious about what they're building. And then, you know, founders tend to be a very passionate bunch. And so they love talking about their idea and why they're doing, you know, the company. And so I think when you start having a conversation with a founder, just naturally a lot of things will come up in the course of that. Where, you know, then I'm able to then kind of tap back and connect the dots and figure out, oh, who else would be helpful for this person to know, you know, as they're building their business. And, you know, I think one of the things is, yeah, there's obviously a lot of attention and press that goes into the venture capital world. Everybody wants to talk about, you know, the fundraising environment and how much they raised and at what valuation. And, you know, I think that's interesting and important, but in a way, it's kind of the wrong metric because there are lots of ways of building and scaling a company. And, you know, raising VC dollars is only one of, you know, many different kind of paths that a founder could take. It definitely comes with some advantages. You know, if you're bringing in the right VC partners, again, they're going to be able to help you with their networks. You know, they can look around corners. They've kind of seen this movie play out before, in a sense, with other portfolio companies they've worked with. And so I think the right VC partner can add a ton of value. But at the same time, it comes at a cost. You know, obviously, you're giving up dilution, and in some cases, you know, control of your company to do that. And so I always kind of advise founders that like raising VC is great, but again, it's not the only route ahead of you.
And you got
Um,
to find the one that works for you, right?
totally.
So, for
Yeah.
example, like with Silicon Valley Bank, it's
Yep.
there's different ways of funding your company through a bank like SVB and others. But some of I think the questions that every startup obviously should be asking is, do you have customers that can be my customers,
Yeah.
right?
Totally.
Because you have a significant network of your own customers that could be customers of this company that that you're trying to raise
Yeah. Yeah.
money for and with and mentor. And sometimes I feel like in where Tony and I work, working for a huge company, like 9 times out of 10, we have customers where we work that could help that company
Yep.
that we also support, right? And it's not usually, I feel like, the first thing that comes to mind for founders, that are
Yeah.
trying to get their company off the ground.
Yeah. I mean, well, look, generally with founders, their number one concern always is like not running out of money and going out of business. And so they're obviously like very conscious to that. And then if you think about ways of funding a business, you know, ultimately it's pretty simple.
Yeah.
You can fund your business with customer revenue. You can fund your business with, you know, external venture capital kind of equity dollars that come in, or you can fund your business with debt. You know, those are
Yeah.
effectively the routes ahead of you. And then obviously you could look at various combinations of those three, you know, kind of those three funding buckets. Um, there's definitely a lot more attention on the customer revenue side. And that's even a thing where, you know, it used to be you could raise, you know, a seed round or even a series A round pre-revenue. Like that's no longer the case. You know, now
Mm.
venture investors are really demanding, you know, just different metrics in order to fundraise and for a company to be viewed as investable. So even at the early stage, I'm hearing from founders that, you know, to raise a pre-seed, you know, they're expected to have like 1 million or more in recurring revenue, like for a lot of software companies. So
Boy, times have changed, haven't
yeah, I
they?
mean, it really changed, right?
Yeah.
And then also, but like, you know, the other idea that you just peaked there is that, you know, one of the advantages that startups and founders always have is just speed. And so when I reflect back even on the work I was doing at Booz Allen, you know, from like the solution studio side, and then, you know, ultimately that kind of morphed and became Booz Allen Ventures, you know, it was like 4 or 5 years to basically stand up what became Booz Allen Ventures. And I think that's a real bright spot on their business now. 4 to 5 years doesn't work in startup land, right? These companies are operating on like a day-to-day basis. And so, you know, I think if you look at the characteristics of, you know, what sets apart some of the most successful founders and companies, it's generally just like a ruthlessness when it comes to speed. Like that is the advantage.
Yeah.
So, Patrick,
Do you think there's anything unique to
yeah.
the space industry in this area?
Um, you know, when I think about the space industry, well, one, I think it's a really exciting kind of spot in the market. It's pretty small compared to just the overall venture ecosystem. You know, I think the last data I saw was that, you know, somewhere between $3 and $4 billion will go into space tech companies this year out of, you know, probably around $80 billion is getting deployed into the venture ecosystem overall. One of the things that's unique about that sector is just the capital requirements. It's very different from just building a software company. Like you actually need to have a lot of physical infrastructure, capex, and so it basically requires these companies to raise more. Um, a lot of them also obviously have a defense or at least a dual use angle to their business models. And so, I'd really encourage them to look into ways of getting, non-dilutive government funding, SIBRs, grants, things like that.
Hmm.
Um, and otherwise, I know a lot of venture investors are really excited about the space just because, we're clearly in a space race, with China and with other countries out there, which again is, fueling more innovation, more capital going into the sector.
We met with the founder of a European space software company a couple of weeks ago, Lean Space. And Alvaro, it was interesting. They'd just gone through. I think they've been through a couple of funding rounds, and he was sort of saying like one of the biggest challenges he's got as a software company in space is just competing with other general um, SaaS companies for funding. So, are there any particularly how do you advise founders to, I guess, better communicate their story and stand out amongst other? Because there are a lot of
Yeah.
choices for where these companies can invest their money.
Yeah, well, a lot of it comes down to why is this the right company and the right team to go and win a market opportunity out there? Like, what's your right to win? I think one of the things for startups that's just super important is being so narrow, almost maniacal with your focus. One of the reasons why startups fail is just trying to do too many things too soon for too many people. And so I think even there, having a very clear definition of like, who is your customer? Like literally, who is like, what is the organization? What is the role within that organization? What problem are you solving for them? And really proving that out to get, some reference points to, confirm that you actually have product market fit. And then that's what will bring a lot of investors in. If they see that you've actually solved a problem, for a company, and that, it's a sufficiently large market opportunity as well, because that's the other thing to keep in mind. Venture, we often say, venture investors are looking for venture sized outcomes. It's a power law industry. And so if you have a fund that's making, call it 20 investments, they're looking for like one or two of those investments to return the fund. I mean, they're
Yeah,
ready and willing to write off, half of the deals that they do. And so in a lot of ways, it becomes a winner take all dynamic. Um, and they're looking for companies that have the opportunity to, create or to serve a really, really big market. And so I think it's also that's one of the questions that founders need to just keep in mind. Like, what is the market opportunity I'm going after? What is my right to win? What's my unique insight or the experience that I have that will position me to basically fulfill that need? And then from there, there's I've written a article just on Medium years ago around like how to evaluate startups. The three metrics that matter. And again, it's pretty straightforward. Number one is growth, right? Basically, any venture investor is going to want to understand like how is the company growing, because that also proves out like are you addressing a real pain point in the market. The second metric they're looking at then would be around churn. That could be measured by net revenue retention or whatever. And if you have basically a low churn rate, high net revenue retention, then that indicates that like, okay, you're addressing a real need in the market indicated by the growth. And you're effectively solving that need because your clients aren't, churning out. If you had high churn, that would indicate, okay, you've identified the right problem, but your solution's just not there to solve it.
not the right solution.
And then the third one, which has become a lot more, in focus over the last couple of years, is around profitability. And so again, it's easier said than done, but if you have a company that is
Yeah,
demonstrating pretty high growth rates, pretty low churn rates, and they have a business model where the kind of the unit economics make sense and they can do this profitably, then sort of the world is their oyster. And, venture investors are generally fighting over themselves to get into those deals.
So, do you think it's a good climate to raise money in right now for a startup?
Um, it depends on the type of startup.
Yeah.
I'd say it's, it's always challenging, right? I mean, even during the boom years, with ZERP and what we saw with the venture world going crazy in 2021 and 2022, venture funding more than doubled over that period. In a way, it was easier for a lot of companies to raise money then, but at the same time, we're still now, we're now dealing with sort of the hangover effects, because a lot of companies that had raised during that era raised at a valuation that was too high. They're not able to grow into it. That creates some really challenging dynamics where these companies need to do a recap. There's less interest again from the venture from a lot of the venture investors to support them, because in a way it's almost easier to write off some of those companies and focus on the next new big thing. Obviously, one of the things that's different in the market right now is just all of the focus around AI. I saw that something like 60% of all venture dollars is going into AI. And if you cut into the data a little bit further, you see that, and the vast majority of that is going into like 5 companies. And so we're
Yeah.
seeing concentration of the likes that we've never seen before. And that's also, I think, mirrored in just the venture world generally, where if you look at like the top 5 or 6 largest venture funds, they're accounting for like over a third of all deal activity.
Yeah.
That used to be maybe 8% or 10%. So just in the last year or two, I mean, it's more than tripled. And so you really have, I guess I could summarize it as like a tale of two cities. Like, it's an amazing market for some people out there. It's incredibly challenging for others. And it's hard to know, which one of those camps you're going to be in.
Yeah, I feel like there's a
Just
lot of conversation now about, is this another dot-com boom? Do you think it is? I mean, there is
Well,
a
I
concern that
mean,
you have a hell you
it's
have a
definitely
hell of a lot of
a
it.
dot-com boom. The question is, will there be a crash
is
after,
it a
right?
bubble? Yeah.
Yeah,
Um,
and that's what I meant. I mean, it's like, you
yeah.
have a company like Whoosh.com that's raising, $50 million for a bunch of servers, which when I worked at Sun Microsystems at the time, that was a really good place to be when you're shipping these things out to a lot of like random companies that weren't making money. But do you think we're revisiting a kind of
Oh man,
a cycle like that? No?
well, it's hard to say, right? Because there are kind of two theories behind that. One kind of thesis is that AI is truly different this time, and that the productivity unlock and what it means just for growth is more than enough to justify, the insane investments that we're seeing go into
Hmm.
the space. I mean, just on the AI build out, this is the largest kind of investment program in history, right?
Yeah.
It dwarfs, the run up to World War I or World War II, or the build out of the highway interstate system or the railroads, or like you name it.
Mass
Um,
production. Yeah.
Now,
Yeah.
there's obviously things that people are rightly pointing out as like, cause for concern. And one of them is just the recycling of dollars within the ecosystem. And so, you can pull up
Mm.
these charts showing like, oh, Microsoft invests, this many $1 billion into OpenAI, which then uses that money to go buy these GPUs from NVIDIA, which then is using that to, partner with Oracle, which is then reinvesting back into OpenAI. And you kind of have like this recycling of dollars playing
Yeah.
out. That definitely makes me a little bit nervous. But I think it's a little bit too soon to know what the ending's going to be yet. I mean, obviously there's going to be market corrections, and that's just a part of like a healthy functioning,
Yeah.
economy. But hopefully it's more of like a glide path down and not kind of an explosion. But something that I'm watching closely.
Patrick, just given where, at least in your current role, where you sit in the ecosystem and thinking about the space market, what are the particular space and aerospace areas that you see like real interest and potential, where you sort of see the biggest potential for in the future, and interest from investors?
Yeah, well, I'd say a lot of the biggest interest from investors is coming more on like the later stage firms. It was like
Mm.
trying to get an allocation into SpaceX, private markets. Everybody wants that, for instance.
Everyone wants that.
My world is typically a lot earlier stage.
Yeah.
And so there it's more around like, how can we use, this confluence of new technologies coming to market between, AI, between autonomous systems, between computer vision and machine learning. How can you create kind of new business models that bring all of those things together? Um, you know, there's obviously still the ongoing war in Ukraine. And so a lot of what I'm seeing is more coming from like the battlefield in Ukraine as, Ukraine and kind of their allies are developing technology really fast to help, the war fighters out there. So there's a lot on the drone side. I think the whole future of warfare
Yeah.
is changing really dramatically. We're seeing it play out in real time. And I think that's also something that is driving a lot of investment into the space because, again, just the dynamics of war changing. If you can use a cheap drone to go, blow up very expensive, legacy military infrastructure or equipment, it changes the dynamics and kind of the power, posture that you have on the battlefield. And so I'm seeing a lot in terms of like, new applications of drones, but also drone defenses, directed energy lasers. I mean, you name it.
Yeah. I mean, it's that kind of leads to our kind of these questions we wanted to have around, building and nurturing, I guess, lack of a better term, ecosystems,
Hmm.
right? So we talk about defense tech, there's different parts of the country I think that are ripe for, providing like we were talking about with where you were at Silicon Valley Bank, providing a whole bunch of different areas of value. Could be legal support contracts, could be different unique funding mechanisms like in the government, and maybe just kind of local, uh, expert capital out there specifically around like defense tech, in the DCs of the world and other
Yeah.
parts of the country. Um, what is it that you see in terms of ecosystem building that kind of makes certain parts of let's just say the U.S. as an example, but globally too, that make an ecosystem like really unique, like a DC for defense tech, for example. I mean,
Yeah.
Tony and I interviewed. We had an interview a couple weeks ago around how Atlanta has become an ecosystem for space investment, and a lot of it's from the work that Georgia Tech does. And there's a lot of work. There's a lot of young people coming out with engineering degrees at one of the top schools in the country, in the world, actually. And that's kind of just one of many reasons why the ecosystem is actually unique for aerospace. Uh, what do you think it takes to build like a unique ecosystem that supports startups and that has a high correlation of success from your view?
Yeah. Yeah. I mean, look, I think ultimately it comes down to just like the depth of, talent pools that you have in particular areas. There are very real network effects at play as well. And then also having, one of the requirements for any robust ecosystem is, basically having big outcomes, right? In the sense that like you need a place that has seen enough early stage companies that have graduated up to become later stage companies that have been acquired or gone public or whatever. In the process of doing that, they create a lot of wealth that gets recycled back into the ecosystem. It also creates a kind of a very deep talent pool of people who have been there and are able to take a startup from 0 to 1, or in some cases from 10 people to 10,000 people or whatever that might be. And that's also why you see so much concentration in the venture ecosystem in the US. Like, I'm really kind of optimistic and encouraged by the build out of all of these kind of new innovation hubs in the country. But at the same time, New York and NorCal, principally San Francisco to San Jose, those two markets account for 80% of the overall venture ecosystem in the country. Every other market is basically a rounding error, right? And so it's like,
Yeah,
yeah, Atlanta's exciting, but it's like 1 or 2%. Miami had
Right.
been exciting in some certain sectors, 1 or 2%.
yeah,
Now that said, there are nuances. So like when you talk about defense tech, advanced manufacturing, things like that, the whole area around Newport Beach, I think is really interesting. And again, it's kind of clustered though. Like where's Anduril? Where's Palantir? Right? You see like a build out, even in like Austin, Texas, obviously in DC. And so there are certain, markets there that are deeper and kind of punch above their weight when it comes to defense tech or dual use or what have you. That said, I'm a believer that you have opportunity anywhere. But the reality is that like, we saw for a couple of years during, you know, call it 2021, 2022, it seemed that Miami was like the hottest startup ecosystem. And I think there are so many things to like with what was playing out down there. But I think what a lot of founders realize is, yeah, that was an easy place to start a company, maybe not the best place to scale a company.
Scale.
Just because, if you need to hire 500 engineers or particular roles in product or whatever, there's just not the depth of the talent pool yet, and that takes time. Now, your example of Georgia Tech, like I think that's smart because again, there's an anchoring around these top research universities that are churning out talent, and so I think that's an advantage to places like Austin, to Atlanta, to Boston, et cetera.
Yeah.
Patrick, as we sort of round this out and thinking about what, what what these different sort of local communities can offer, um, I really liked how you sort of started the discussion talking about how, I guess, founders not just thinking necessarily about banking just from the finance you get. Like it's about all of the tools that build the foundation of a good business. Are there particular things that founders underuse or underappreciate that that you think really that founders should be thinking about that maybe it's just not obvious to them?
Um, I don't know, because it's a little hard for me to have a counterfactual with this, because when I'm
Mm,
looking at like what sets apart the best founders, it just tends to be this relentlessness, right? And they are asking for help, and they should do that. I mean, the worst thing that happens is they get a no or they don't get a response. But I think that
yeah,
founders should be asking a lot of every partner they work with. Ask your bank for things, ask your law firm for things, ask for customer intros. Again, like, it doesn't hurt anything, right? The worst case is they
yeah, I
just
love
they
that.
just kind of get a no. You have one customer, great. Ask them if they'll intro you to additional customers, right? But I really think it just comes out there with this, again, maniacal focus around, just trying to get in the right rooms to grow the business.
I
It's
think
interesting.
one thing that
Yeah.
startups under you, sorry, go ahead, Tony.
No, I was just going to. I was going to say, sort of coming from discussions that we've had with our friend Kristen Sargent, Rob. Like when she went out
Mm.
on her own, she said she was like pleasantly surprised and really kind of buoyed by the fact that if you ask for help and you're out there trying to start a
Mhm.
business, like she was amazed how many people said yes
People want to help. People want to
and
help.
wanted to
Like,
help, which is great to hear that.
yeah.
Sorry, Rob.
Yeah. I mean, look, it's one of these things where I think, look, I think it's really cool if you're lucky enough to be able to, let's just say, connect friends of yours who end up getting married, right? Like, that's kind of awesome, that you get to play a
Yeah,
role in that. Pretty similar if you can bring people together and they end up founding a company or investing in each other's company or whatever. I mean, it's just a fun thing to be able to do, right? I think people ultimately like helping people.
Yeah, I agree with that. And the one thing I was going to say is, in my experience, especially when I was focused more on startups in my a little bit more in my past, I think startups typically underappreciate the power of partnerships as it relates to distribution, as it
Mhm.
relates to just sales, because this is just my experience, and maybe it's just kind of who I've met and companies I've worked with. But a lot of times, I feel kind of the strength is also the weakness. Like there's this fire burning in the stuff in their belly, where it's, I have the product that's going to solve all these needs, but most of the time, the customer, especially if it's an enterprise like type business owner, like a business unit, like someone who runs a business unit is making decisions, or someone in government who's making a decision on, down selecting a particular
Mhm.
proposal, they're typically not just looking at the data integration platform,
Yep.
or the just viewing a geospatial map, right? Like there's a lot more there. There's an Uber solution. And sometimes I think startups sometimes tend to underappreciate the fact that the buyer is actually not really looking for the coolest technology, but they're looking for something that is what that startup provides plus others to solve their problem. And that's what they want to buy. Right. So sometimes I feel, actually, a lot of times I feel that um, startups are really kind of underappreciating the fact that having strong partnerships with other companies is important. And I get it. I mean, when we worked at Booz Allen or any company I've worked for that's large, it can be scary, right? Because the company is concerned they're gonna take my IP, they'll take my idea, they'll recreate it, whatever it
Yeah.
is. But at the end of the day, I think the customers that companies are typically targeting are looking for something more than just what they offer, and there's something bigger around them, and that they need to be a part of that really completes the sale. So that's just something that I thought I would add,
Yeah.
because I definitely
Look,
think
I
it's
totally
something.
agree with that. I think one of the things that a lot of founders struggle with is that they're used to operating at a certain speed and cadence, and they expect everybody else to operate at that speed as well. But then they're
Yeah.
trying to land some bigger enterprise deals, and those people work on a different, time horizon. I think one of the things that, maybe it's a little bit of a growth hack, but, and it also just kind of ties into psychology and human nature. But there's a big opportunity to bring some of these partners in to even help inform product development, right? And so if you
Yeah.
go out and you're working with a company and you're like, hey, not only are you my customer, but can I also make you a design partner? And can you help, can you help me figure out what should be on the product roadmap as I continue iterating the solution over the next couple quarters or years or whatever? And then you make them feel bought into the journey you're on and feel a little bit more ownership, and they feel invested in your success. And it obviously also increases the odds that, again, you're going to be solving
Yeah.
actual problems. I think going back to one of your questions, like one of the mistakes I've seen, kind of founders make is just being too wedded to their initial idea.
Mhm.
And, I see this every day because again, when you look at the stage of companies that I spend a lot of time with, the early stage through pre-series A, I would say probably around 90%, if not higher, of companies when they go from, the early ideation phase to getting up to that series A kind of graduation milestone, like over 90% of them have materially pivoted what they're doing. They've
Mhm.
changed what they're building, they've changed their business model, they've changed the market they're serving, whatever. And so I think, again, like one of the advantages of startups is just speed and also iteration. And so you don't necessarily know, like you have an idea about a problem you're going to solve. The odds that you're going to get it right on the first time are really low. And so it's more around like identifying the right problem and then getting in there. And again, like working through this iterative process, and bringing, some of those customers and design partners along for the ride with you.
Awesome. So, just to kind of wrap it up before we get to Rob's fun question at the end, Patrick. We've talked a lot about with other people we've interviewed about mentorship and the importance of mentors for all of us. Is there a
Mhm.
particular mentor for you that sticks out, or a piece of advice you've got through your career that you'd like to share?
Man, I mean, I have so many. I like seriously, I have so many. I feel incredibly fortunate with the, kind of this stable of people who are by my side, right?
Yeah,
And I was even just going through this, the decision to leave SVB was not an easy one. Even though I'm extremely excited about this new opportunity I'm going to be embarking towards, I probably had 30 conversations with people to just help me think through
yeah,
it, right? And that was so beneficial. So, early on, one of my mentors at Booz Allen had shared like, hey, there are, there are two ways that you could definitely fail here. One of them is by not asking for help when you need it. And then the second is by not giving help when somebody asks for it. Because in either one of
mm,
those scenarios, you're wasting somebody's time. It's just not the way that you want to operate. And so I think being really generous with time is great. And it's one of these things where it's like the more you give, the more you get. And so I try to be as helpful as I can with my network, and that really gets reciprocated. And so it becomes like this positive flywheel that just keeps building
Mhm.
on itself.
I love it. That's great.
Awesome. Okay. So we always finish these with a hopefully a fun question, so people could get to know you a little bit
Mhm.
better, Patrick.
Okay.
So since you're a banking nerd, I thought I'd ask you the question: what is your favorite all time movie that revolves around banking or
Oh,
finance?
oh, man. I mean, there's so many. Uh, you know,
Are there really?
so Margin
Like,
Call.
what are like the?
Because like Margin Call is a classic, right? I feel like that's
That's
at
a good
least on
one.
the top five.
I have not seen that. Who
Um,
who is in that? I
it's
haven't seen that.
it basically follows an investment bank, during the 2008 financial crisis. Kind of gives you an
Mm,
inside look. It's a good movie.
sounds like a
I thought
comedy.
I thought The Big Short was entertaining, and obviously
Big
Michael
Short
Burry's
was
like
really
back in
good.
the news
Yeah.
now with
That's good.
now
Yeah.
he's back in the news with these shorts of Palantir and kind of all the rest, and looking at the AI side. Kind of a fun one was the GameStop movie that came out a couple years ago. I think that was called
Oh,
Dumb
that was a
Money.
good one. Yeah. Yeah, that was. What about
Yeah.
you,
I did
Rob?
not see that either. Oh, mine? Okay. My my answer is going to be a little bit timely. I like It's a Wonderful Life. It's
Yeah.
about
Okay.
banking. It's about right. It's a savings and loan
Never
business
seen
with
it.
George Bailey. Wait, what'd you say, Tony?
I've never seen it.
You've never seen it?
Oh, it's a
Oh my
classic.
god! Oh my god! Oh,
It's a great
Alma,
Christmas
your
movie too.
friend. All right, it's so good. Tony, you have to watch it. It's a Christmas
Okay.
movie. I'm not going to tell you
All
anything
right.
else. But it's an incredible story. So I don't know. I mean, of course, I thought I thought Wall Street was
Oh, Wall
phenomenal
Street.
back in the day. Wall
That's
Street was
my number one.
so good. I
Yeah.
mean,
Yeah.
that was so good. Wolf of Wall Street's pretty
And the
good too,
and
but
the
Wall
and
Street's
the
excellent.
80s and just like the
Oh,
it
Yeah.
just captures the spirit of the 80s, which I love as an
it
80s.
does. It's,
Well,
it's really good.
And
So,
look, I got to tell you, I mean, I know you asked about movies, but I have to say, the TV series Silicon Valley kind of nailed
Oh,
it.
that's
And so
yeah.
that
the
movie.
number of people I've met, meetings I've been to, events I've been at, where I'm like, oh my god, I feel like this could be a parody in a sense.
Well, you know what's funny, Patrick? I was thinking in real time as we were doing this interview, I was going to ask you, is Russ Henneman's advice the best advice? You just want to say you're pre-revenue forever as long as you can.
Well, I don't think that's going to work anymore in this market. But,
Exactly.
I mean, again,
show's
with
awesome.
satire, I mean, they really nailed it.
Oh
with
yeah,
that one.
Tony, what's your favorite?
Wall Street. Yeah, that was what I was going to nominate. Absolutely.
The Wall Street? Yeah.
Yeah, totally.
Awesome.
Well, Patrick,
Well,
it's been
Patrick,
a
thank you, man. This was so much
great
fun.
conversation. Really appreciate it. I learned a lot actually, and I think our listeners are going to really enjoy this. And Patrick, I can't wait to hear where you pop up. So I guess we'll stay tuned on LinkedIn over the next couple of weeks. But if people want to learn more about you or SVB, where can they find you?
Yeah, LinkedIn's great. So, hopefully we can share a link to my LinkedIn profile. Feel free to send me a connection request. Obviously always happy to hop on a call, to just be helpful for anybody out there building. I feel like I've really been in one of the best jobs in the world to be able to, I think materially, in a lot of ways impact, the growth trajectory for a lot of these companies, which, it's the future of different industries. It increases competitiveness. Anything I can do to help reduce the barriers to entrepreneurship and to make the lives of founders better is what I want to continue doing. So
Awesome.
Well, best
Well,
of
thanks,
luck in your new
Patrick.
job, Patrick.
Yeah, all
Thank you,
the
guys.
best. Can't wait to hear. All right, and thanks
right.
everyone for listening. If you like what we're doing, make sure you leave a review or rate, and we'll look forward to seeing you next time. Cheers.